Dear investors, welcome to IIFL Securities YouTube channel. Today, we have a very big interview, that with Mr. M.R. Kumar, Chairman LIC. He is credited in keeping crores of Indians safe. LIC is a household name, and finally it has come out with an IPO. So let us connect with him and understand what the company is doing, what is his business plan, and more about the IPO.
Profitability, I will just give you in a moment with Mr. Dinesh Pant. My actuary is also on call. He will probably give you. Going forward, we are quite bullish on the group business. In fact, from a typically state government, central government schemes, we moved away. We have private sector also joining in the last couple of years. We are quite profitable in that segment. We have also launched some new products recently. So I believe that the kind of business we've been doing in group group term is something we are more bullish going forward. Group superannuation, group gratuity also will have a lot of traction going forward. So if Dinesh has something to add on the profitability, I can just ask him.
Yeah, I understand this profitability. Well, from the point of profitability, we have to see, in context of, since you asked about particularly group products, we have to see in context of one, not only margin, but total overall, value of new business or business that will get created. Now, for us, for corporation, we have a large portion of market share in our group portfolio. And as Chairman sir was just, mentioning that, we have to take a very calibrated approach towards, protection business within that and the fund business within that.
Okay.
So because the volume is quite, significant in that thing, so the profitability will not be, for example, for the protection side of business, the new business margins are very significant in protection business. So even lower amount of volumes can get good profitability. In case of, fund-based business, the margins can at times be low, but the high volume can add to the, overall profitability. So the group business will continue to create value in terms of market share as well as value of business for the corporation.
A few things that we are working with is the banker part of it, where we are going to have push it up significantly in terms of the share that we have in terms of the volume of business. In fact, we have the highest number of bank branches attached through the tie-ups we have with the banks, more than 60,000 outlets. Right, and this year we have going to have separate digital platform for each of these banks to assist them with doing, because each bank has a different set of parameters, a different kind of digital platforms, very difficult to integrate across. So we may have different platforms for different banks. The work has already started in terms of that by the IT department. This is one thing, and digital by itself is a big space now. And though we were there, but we are now tied up with certain people. We are reinventing the digital platform now. In fact, it will be, we want to create a scenario where it is really easy for the customer to, just log in and take insurance. Whereas we have already introduced video medical and all those other things, the reports that are required offline that can be done online as well. We will be rolling it out pretty soon. And then I think going forward, that will help us. On market share overall, I believe we, compared to other countries in the globe, we have held on to more market share than anywhere else in the world. And we will continue to, look, the pie has to grow. The insurance sector has to grow as a whole. So how much of it that I can grab is going to be important. But having said that, I think we have grabbed quite a bit of it. In fact, even though we lost something during the year, people appreciate that the last 2 months, we actually got back 3%. So we are comfortable and confident that we will be able to do that in the future as well. I think basically we thought of a bigger size initially, but looking at the circumstances in the global markets and the war and other things, I think we thought it prudent, and the government thought it prudent that this can be reduced a bit. But also to answer your other query on whether about the timing, but I think most of you know better than me that there's no such time as the right time for the IPO. But then having decided to extend it and we waited for some time, we thought that it's pointless to wait any further. That once that we've reduced the size also, and we thought it is better to go ahead and do it. And I think, I believe it is going to be a hit. Let's hope so. Look, we have been the government insurer, and therefore we have reached out to tier 3, tier 4 quite a bit. Therefore, we have small ticket policies. It needs to be sold. India needs to be insured. So we have a national perspective and a national call as well. But having said that, I think we have been quite competitive in the market. What we need to do is to strengthen the backup partnership, which I've already mentioned, which we are planning to do in a big way. Probably increasing ticket sizes across all the policies that we sell. Also bringing in more defined, benefit products, non-par products, protection business is something that we would like to grow on. And I think Dinesh would also like to add something from the actuarial point of view.
No, yeah, actually, frankly speaking, it is LIC's journey has been commendable, going by the past, and it's been one of the only insurer possibly globally which has retained such a large market share, even after a sector opening up for more than 2 decades. But definitely, there is a change which we are expecting, change for better. And in fact, on all piece of marketing as well as business management, the corporation is going to work upon, as Chairperson was mentioning just before. We continue to consider our traditional participating line of business to be our strength, but we see a lot of growth opportunities in non-par business. And since the shareholder has always been important, but the government of India was the one. Now we have larger, segment of shareholders. Possibly corporation strategy is now to work for the optimal market share, which is profitable and large enough and good enough, so that overall profitability for all stakeholders comes into it. And we personally believe, and as LIC has done, you can see from our disclosures and rendering prospectus also, that larger number of non-participating products have been added in the last year also, will continue to be added, so that overall greater value emerges for the shareholders as well as for the policyholders. So I think the journey here onwards, we are very sure, is going to be better and better.
Hi, Mr. Kumar and Mr. Pant.
Hi.
Hi, good afternoon.
My question is, LIC has already become such a large organization, and they have successfully been running their show for the last 50, 60 years. And now you have a 6 lakh crore market cap expectation and no competitors anywhere near you. And financial literacy is growing, and more people, the penetration of financial products is increasing. So what's your growth strategy, and what kind of growth do you see in the next 3 to 5 years?
We are, Mr. Sourav, thanks for the questions. I think having said that we are big, I still tell internally our people that in terms of the market, we are pretty small. So the penetration is pretty low in the country. So if you look at the size of the market, the available size potential that is available in the market, we are not all that big. I mean, there is quite good reason to say that we can become much, much bigger. But having said that, I think the growth trajectory has to be quite different. We are looking at we have a large agency channel which has supported us all this while. But though we will not move away totally from it, we also have a digital plan. We have a bank assurance plan to grow the business. And for agents as well, we have already introduced last year during the COVID an app to sell insurance using the app. We call it the phygital model. I think in India, the phygital still will work. I mean, though the younger population is going to totally digital means, there is a large section of society, including pensioners who want to buy annuities and pension products, who would be more comfortable talking to somebody. And for them, we have introduced this phygital model. And having said that, I think we are on our way to ensure that we capture every segment of the market, every age group, and every kind of product is available with us in the basket. And we are coming out with new products. Mr. Pant will add maybe what kind of products. Mostly on the non-par, we want to bring in products. And protection business, according to me, is the first thing that we need to do. India requires protection. And once we do that, once people get used to that protection product, they'll be interested in buying ULIPs. We have been very strong on ULIP last year. We had the highest growth among all the market participants in the ULIP products. So hence, I think going forward, we are confident that these strategies will help us to grow the business in a big way. Dinesh can add something.
Yes, sir, thank you. Actually, truly so. In fact, whatever has not been our great strength as of now offers a lot of opportunity for growth. As was we mentioned, these specific sectors, India, particularly in health sector, offers a lot of opportunities. And LIC is one of the companies which offers very, comprehensive type of health products. Similarly, in protection business also, today a corporation is offering most competitive rates and managing this portfolio very well. Tulip's chairperson mentioned about the growth rate, and now we expect this growth rate to be coupled with volume increase also. So I think we have a lot to add on it. In fact, corporation is one of the insurer which is offering products from the range of let's say 50,000 to a product niche product like Shiromani, which is for a very niche segment of 1 crore is the minimum sum assured. Many people are not aware about it, but we have many customers under it. So we have a very large basket of products which we are going to leverage. All our entire product line. Add with another, other because ultimate the driving line for corporation even after this, IPO would continue to be need-based selling, because we believe that if it is a need-based selling, then it will lead to persistency and higher profitability. So, and if the industry is expecting to grow at 15-20% or so, and as chairperson was mentioning about the huge potential for growth in view of the limited market share of around 3% or so, I think the potential for incremental growth is tremendous, coming from the significant growth in our non-par product.
Thank you. My second question, I think partly you guys have answered. So basically, I wanted to ask that increasingly insurance plans for all players are getting less distinguishable to their peers. So are there any innovative products in your pipeline?
We are thinking of some, Sourav, but you're absolutely right that going forward, all products will probably merge into a kind of a situation where every product looks alike, seems alike. Probably the differentiation would be in the way we service them. The differentiation would be in the way we offer them, means to pay online. In fact, our digital payment has gone up by more than 50% in the last 2 years. People are paying premiums online. Therefore, what Dinesh said about persistency is something we are able to control better. But you're right, special products, we have some in mind. We'll probably will not be able to share anything today, including appointed actuary may not be able to, but then we are certain to come out with something that is different from what the market offers. The regulations of IRDA, have some investment regulations as well. We also have a SOP, and this is something that we will have to tweak if we want to get out of the companies that we are in today. But I believe we are sitting on good companies already. Which have given us value. Plus, we have a buy and hold strategy. We are not. We wait for a right opportunity to enter the stock, which will give upside in the long run rather than in the short run. And I think if Dinesh wants, he can also add something to that.
So definitely, in fact, a lot of discussions have happened internally on this aspect also. And we only have to look into risk-reward proportions which will come out of it. A lot of deliberations have happened. What incremental benefits will come, because we have to watch interest of everybody. On the other side, yes, we have to definitely consider this segment. So surely this is an agenda on the mind of the corporation. And we are into it and we'll be into it. Sure.
Okay. We have, our agency force is not as old as people would believe it to be. 42% of our agency force are millennials, right? And in the last year, the number of agents we recruited, more than 70% of them are millennials. So there is a connect that the agency force, the younger force, has with the younger community and the younger population of India already. So that takes care of that, and probably going forward, we will be recruiting more younger people as well. On the phygital model that I talked to you about, it's called Ananda app. It's expanded like Atmanirbhar Agents New Business Application, meaning that it is self-reliant. It is can be done by the agent himself. This we introduced during the second wave of COVID, when agents found it difficult to meet customers. Customers wanted to take insurance, but they were not willing to meet agents. So what this app does is that the agent can call up the customer, get all his details, explain to him the scheme, over the phone, and further he can get a confirmation mail from the customer saying that he has understood the product details and he would like to invest in those products, then he will collect the information of the customer online, fill it online. The agent himself will fill it online through the app, after which the underwriting happens. In case there's a medical report required, we have arranged for a video medical also that can be arranged automatically, after which the customer gets a link to make the payment. So that's why we call it phygital. And India is still, while going digital, I think some of them would like to go through the phygital way before they really understand digital. So that is working well for us. Look, if you look at the numbers, possibly it's a question of percentages. So it's a number game, really. If we do well in the group business, it's easier to ramp up the numbers easily, because on the individual segment, ramping it up takes time. It depends on the kind of distribution channel. It depends on the product mixes that you have. But I believe there is a good growth potential for both. So if I say that the growth potential is going to be similar, both for the individual and the group, possibly the ratios will not change much, but the growth in number of policies will happen. We already have an online, segment available where people buy insurance online. 11 to 13 products are available on that platform, but we are revisiting that whole system. Probably we'll come out with a renewed model, and we're also we've already tied up with CSC, which has more than 150,000 centers across the country. The phygital that I was talking about earlier can possibly be extended to some of these elements who are there out there in the field. But a pure online is something that we are working on, a digital platform that will help us to scale up, in the sense that we will also be tying up with aggregators, which we haven't done in the past. And this is something is already happening. A couple of products are already being uploaded on some of these aggregator sites. We are testing it. And I think that is something that we will become rolling out quite soon.